Hello everyone, and welcome back to Elysium Trading Empire channel. So today I'm very happy to share with you something new, probably that you haven't found anywhere else on YouTube or on the internet. But this is a new thing which have been testing for months now, and it works pretty well, and it works, and you can see it every single day, literally every day. And this is a new shift of market structure. So it's very specific and it's very powerful because you don't need to wait for a break of structure. So it's pretty clean, it's objective, but yeah, let's see, let's start. I call it the ETE SMS, or you can call it ETE Concept, like you want. ETE stands for Elysium Trading Empire, of course. So let's start. So the characteristics of this shift in market structure, so it happens every single day. It is fractal, so it works on every time frame, and I will show you example on big time frames as well as 1 minute time frame. So but yeah, you can use it no matter in which time frame you see it. It always works. I mean, if you get the analysis right behind. Because remember, a shift in market structure alone means nothing. You need to have an analysis. If you remember my 3 steps trading formula, which I described in my first video, my way of trading. If you didn't see this video, I recommend you to start with this one and to continue the current one, to stop the video and to see my way of trading before continuing this video. So if you are aware of my strategy, so I first look for the liquidity, for the target. This is the first thing I'm looking for. Once I'm getting the target, then I'm seeing if the current market conditions, the current structure permits me to enter the trade in a good area, you know, because even though you have the right direction, you can enter in a wrong area and get trapped. So you take the stop loss, market takes the stop loss, and then it goes back in the right direction. And only after you get the direction and the right area, you can look for a shift in market structure. So what's good about this one? It makes you enter very early without waiting for a break of structure. And at the same time, it is safer. Because once you break the structure, it becomes riskier because more people will be induced to be trading in the same direction as you are. While if you anticipate with the right, with this shift in market structure, which is still a safe one, you are in good position. You can be break even, you can, and also the RR is better because you will be, of course, closer to the high than if you trade after a break of structure has happened. I mean, it depends. Sometimes you can get small entries in 1 minute, which can get you a better RR. But as I said, more people are induced to trade in your direction. So it's more risky, even though you can get better are anywhere anyway in the move. And you rarely miss any move with this technique, because sometimes when you wait for a break of structure or a confirmation, the price just goes straight and it does not come back to the area you are looking for. If you have seen my last video about the continuation in 1 minute, and if you use the method of this video, you can still you can still catch a significant move, even though you are not at the top, you didn't enter at the top. But if you are not familiar with the continuation technique, you can just miss the trade, So just wait forever for your entry and it does not come. So the only concern with this shift in market structure, like always, and like I said, is to trade in the right direction and at the right place. So yeah, if you didn't see my video, I recommend you to watch it before continuing this one. And by right direction, it doesn't necessarily mean the most profitable one, but the appropriate direction for the time and the place where you are trading from at the moment, What's important, it is where you are trading at that very moment. Is it the right direction? Even though you got, the right analysis for the day, it doesn't mean you enter from the right place or, So it could be a 10 pips pullback or a big impulsive move. So yeah, this shift in market structure works for any move. It can be a small move, it can be a big move, doesn't matter. And yeah, secret note, it's all about the liquidity. It's always, no matter how many videos I will do, the most important thing is liquidity. If you understand liquidity, then everything gets easier. So there is no better way to explain it than with an example. Let's start with a daily weekly chart of Euro USD. Let's start with the weekly. So here we see weekly sell side has been taken in October. And after that, so you can see on the left, if you go on your chart on weekly, which liquidity I'm talking about. So now what we are looking for is to target buy side liquidity. We need at least a pullback, even if you aim to continue lower, probably it will go lower, we don't know, but it needs to pull back and take some buy side liquidity first. And what better target than those nice order blocks? So here I will explain to you what my shift in market structure consists about. Generally, if I can explain it simply, you just take a clear OB that has broken, so that has taken the sell side liquidity or broken the structure, does not matter, same thing. It needs to be clear, crystal clear. This is the first and very important point. Then what you do, you wait for retest of that OB and you wait for rejection to be formed. So if you are trading bullish, you wait for a bearish candle to form and to close, and only at the close you can buy you place your buy order right there and your stop loss right there. Of course, here it's weekly, so it must be a big stop loss, but it's just to show you that the concept works on every time frame, and it's exactly the same in 1 minute, in 5 minutes, in whatever time frame you are trading. So the third point is I prefer if there is a fair value gap right there. So you have one which breaks, and I would prefer to have one on the bullish move, you know, before the retest. But it's not necessary. What's necessary is to wait for a bearish candle when you want to trade bullish, and a bullish candle if you want to sell, and you enter at the close. So you trade, if you have a fair value gap, you don't need to wait for the close. You can trade straight away from the fair value gap. I will show you in next examples. But the pattern usually look like that. You have a bearish move. They make a very clear order block. Boom. They take the sell side liquidity. Then you need to wait for a retest. This is very important. It needs to enter this order block. And then if you have fair value gap, you can trade right from the fair value gap top, or you can wait for red candle close, for example. Let's see on the daily. On the daily, what I didn't like about this price action, so it's the same OB, it's the same weekly order block that you are trading from, but there is no fair value gap. So I was a little bit sad, and I changed the time frame into 2 days. Now in 2 days, you have a clear order block, which I refined. So this is the weekly, and this is the 2 days I refined. It's a pretty clean order block, and you have a fair value gap. So here you trade right from the top of the fair value gap, same stop loss. And of course, you can target at least this high and optimally this high. Now, let's see a live example, which I took Tuesday of this week. So scenario, you always start with an analysis. You never start with just a shift in market structure, you know. So I saw this accumulation of sales, you know, sales and with some unmitigated OBs. And we took sell side liquidity. So for me, the stop losses are there because people will be looking to trade in this range now. They say, oh, this high, this is the high which produced this move down and took this liquidity. So people will be trading in this range. Now, we got the direction, which is bullish, until this buy side liquidity is taken. So this is the day start. Huh? And now we zoom in 1 minute, because in 5 minutes, I believe there was nothing very important for the analysis. So I put 2 alerts. When I saw this, I didn't want to sell because this doesn't look like a clean shift. You know, for me, this is liquidity, all this. And I'm not willing to sell also because my bias is bullish, but I'm also not, I'm not sure to buy because there is no any evidence of a buy setup, you know, of a shift in market structure or whatever. Look, this is this is the move that produced this little break of structure. So this wick is lower than this one. So we need to break at least this one so I can consider buying. Here, this is no clear shift in market structure right there. It could have been, but I waited, so I put one alert above this and one alert below in case we just make a new low, and then I will reanalyze, you know. So my alert popped up. I open my chart again, and this is London open at 9 Paris time, and it just went up and up and up. And for me, this is too short. It's not a real pullback, you know, and for me, this was liquidity. If we had a pullback there, probably I would have bought, you know. But now it's just forming another liquidity, equal low, equal lows. So then what did I do? I was still interested to buy. Remember, the direction is buy. However, the place was not appropriate. The appropriate place for a buy for me, it was below this equals. So you see, even though you got the right direction, it doesn't mean you have to buy straight away. It's better to wait. Same range, okay? So here you could take, we will first say, talk about the pullback, which is not a trade I took on my FTMO account, but a one that I simulated live, you know, I tested live. So I was in front of the chart, but I didn't want to get into a trade because, as I always say in my videos, it's better to stick with your main plan, especially at first when you are not very confident and very consistent, you know. Always stick to your main plan and leave those, you know, little pullbacks for later when you really master everything and you get bored, you know, with winning every day. Then you can start getting into more risky counter trend trades. But for now, just to show you the shift in market structure again. So pretty clean range, clear OB, which took this buy side liquidity. We have fair value gap, but you see it didn't retest the fair value gap. But as we said, it's not necessary. You only need a bullish candle close, which you can trade right away from there, and boom. And why we did not retest fair value gap? Because this is not the right direction of the day. So this is something very, very important, which is not taught in any YouTube videos or whatever, which I saw also when when the market is not moving in the right direction, so it's just doing a pullback, it will leave unmitigated OBs and it will give no shots of entering in, or no worse shot, because you see here, you could enter from a fair value gap, but it's really not worth to enter there for that much pips and with a really big stop loss if you want to be safe. So it's really not worth to enter if you use my continuation technique, which I explained in my last video. But just to show you the shift which I saw live, and you could enter right there, stop loss, and aim for this internal sell side liquidity, which I was talking about just before. So then let's move on. Next thing, I had an order placed right there. So I took half position because I wanted to, I was not sure it will give more, as this is a 1 minute, analysis, I was not sure it would give another entry, with another shift in market structure, because for me, we already shifted the structure, and this is for me a discount area, which I was trading from. So my entry right there, I took my TP right there because I didn't like the price action. If you see, to be honest, this is like a straight bearish move, and I don't like when something are going straight, unless it is in my direction, of course. I prefer when there is structure, structure where people get induced to sell. Here, I don't believe many people would sell from there. But same thing, this is a clear OB which has taken the sell side liquidity, okay? And you could use the same strategy. So clear OB, take sell side liquidity, retest, bearish close, boom. Okay, but I was not really fan of the price action, and I don't believe many people would sell right there. This strategy works better when you trade from a place where people would be induced to, for example, here, people would be induced to buy because this is the only OB, clear OB available at this price, and we took equals and etc. People will try to buy from there, but I don't believe many will try to sell from there, However, now that we have formed a nice break of structure with a nice clean OB right there, people will all want to sell from there. It's pretty clean. And as you see, so here we retested the order block. The first sell to buy to move all, to produce all this move. And you see this little candle is the one which broke this last move up. And it's very little, so it's not like very easy to see, but the same thing apply. You take the last candle, clear candle, which took the liquidity, the last liquidity. For me, it was sure it was the last liquidity because this is the last point where you could buy from. After that, it's stop loss, So you could enter from this bearish candle close, which we tested this order block, and boom. And of course, it hit the TP. I don't know if you have seen in the 15 minute. But yeah, you see, after that, you hit the TP. And then it changed direction again, but it does not matter. We are not here to catch every move. And you see, I'm trading only in the morning because I like this routine. It gives me time in the afternoon to do whatever I want. And in the morning, I focus. I take one trade. I target the 20 pips, percent. Or sometimes I take less, sometimes I take more. It depends. This time I took only 10, 15 pips. I don't remember. 10 pips, you see. It was enough for me. If you can do 10 pips a day, you are profitable every day. And yeah, just for the sake of learning, you see, you could enter when you have the right direction. Of course, you have many entry options. When you are in the right place, right direction, you just follow the order flow, and the fair value gaps. So let's say you miss the first entry, you enter here, second entry, third entry, and then it becomes riskier. So you could still enter there, fourth entry, fifth, sixth, etc., etc. But I stop at 3 personally. So you see, there is no reason to be afraid to miss a move. Let's take a second live example. December 7, yesterday. So yesterday, same type of things. You see it happens every day, 15 minutes, a nice clean range, bearish range, which took the liquidity, very clean order block, bearish order block, which took all this liquidity. People will want to trade from there. Of course, you could trade from the first bearish candle close and buy from there. You could still be profitable. But I was looking for a smaller time frame. So you see, in the smaller time frame, I got an early entry. So same type of thing. You remember, look, this is the range, high to low in 15 minutes. And here you see the same thing in 1 minute, high to low. Okay. And same clear range, same clear order block. You have fair value gap. I entered. No, I entered a bit late because I was hesitating because I didn't like this move. But I still, when I saw the weak rejection, I still entered right there. And I took my TP there before the pullback. I would have taken break even, of course. And this is because I entered early, you know. Sometimes it's better to wait because you get a better entry, which we will see after. But does not matter. I was probably expecting a big move, which will get you no entry, you know. But when I saw all this liquidity forming, I was okay, maybe they will induce more people to sell in this area, you know, with a breakout structure right there. So I took my profits and done for the day. So also, I was almost trapped in the morning. I knew I wanted to buy, so I saw this move. Here you could say it's a shift in market structure, you see, because this high took this low, and then boom, you break, and it follows the fair value gap, etc. But if you go in 5 minutes, it does not look like a move, you know, it looks like noise. This is the difference between real and fake move, you know. Sometimes, so this is a move down. This thing is just noise. It's very hard to recognize and to explain with words how to differentiate both, because this is more like an inner feeling I had that this was not a real move. But yeah, usually when you zoom out and see how does it look, you can see the difference, you know, between a good and a good move, a real move, and a noise. However, this is not the subject of the day, so let's continue with this trade. Yeah, so you remember I took my trade right there and closed there. Now the optimal entry came after that. So you have the breakout structure to induce more people to sell, so more stop losses are there. They are engineered right there, and you get this range and a second breakout structure. Now people, because I don't think people will sell from there straight away. They will prefer, as you have two choices, you know, they will prefer either to trade right away from this one or to wait for a breakout structure with this middle one, you know. So here they got another breakout structure. So confirmation. Now people will trade from this order block for sure. But if you follow my method, you know, the W type of thing, like there is a middle candle which broke the structure. You take this candle, which is clear. You wait for a close candle. People will sell from there because they will think, oh, it's not getting higher. Now we got a red candle. We need to sell right there. if we don't want to miss the trade, you know. And this is how it plays with FOMO, you know, with fear. People will fear missing out the trade because it starts reacting from this little order block, which appear to very clearly on their chart. And you, when they sell, you enter buy at the same time with a tight stop loss. And of course, it hits not only this TP, but also the higher one. You see, 15-minute, this one. The stop losses were there, and this is the final TP. So I hope you understood the concept. I'm trying to make the video very short because I'm talking a little bit too much. I'm starting to look like ICT, you know, almost in my videos. So just for transparency matters, the first trade, you know, and the second one, which I took right there, close right there. And you remember this optimal entry. So before getting into the conclusion, I would like to share with you also the trade of this morning very quickly. So I'm not usually sharing my chart live, but let's make something new today. So this was my analysis for the day. This is Euro USD 1 hour. Okay. So what did I see? This bullish range, another bullish range, so two bullish range. People are induced to buy in this order block because this is the one clear order block which took this high, and also we formed fair value gap right there. Okay, but since yesterday we are just creating liquidity right there. And this morning, if you zoom in 15 minutes, so the start of the day at 8 right there. Okay, we started the day right there. We came straight up. So we had this range, and now we get this new range. What does it mean? New range equal new liquidity below. So you get stop losses below. You have again, you are in this 1 hour which took the liquidity, and here you are in the 15-minute which took the liquidity. When things repeat, like first BOS, second BOS, for me it's double confirmation. It's safe, very safe. It's like a golden trade, you know. It's free. And same thing. You wait for a bullish candle, boom. I took the trade at the close. But this morning I was not very patient. I tried to sell, you know, from there, etc. No, from when it started to, when it started to retest this order block, I started to sell from there, stop loss above, because we never know if it does a W type of thing and takes the liquidity. But this looks like an intermediate term high. You see short term, intermediate term, short term. Then I took break even. Then I sold again, etc., etc., break even. I even took, I think, a small loss. You know, you enter 10 times. This is all nonsense because this does not look healthy in 1 minute. And in these types of market conditions, it's better to stick with my initial analysis, which was I wait for a bullish candle to close, I sell, and I put my stop loss there. It would have taken me only one trade instead of maybe, I don't know, 6 trade I took for the same results. And I was more stressed, you know, so I took profits earlier. I believe I took profits around there, probably 10, 15 pips. While my initial TP was right there, and it was hit pretty quick after you took the trade. So 15 minutes, 30, 45 minutes, done. So yeah, not even 45 minutes, because at this close we are 10, and at 10:30 we are already there. So 30 minutes, I got my TP. And this is what happens when you try to enter every trade, when you are, doing FOMO, when you are not patient enough. But I'm still grateful I did not end up in loss. And my analysis was correct. So it's a win-win situation. You end up in profits, and your analysis was correct, even though you did not profit fully from it. So just to show you that it works literally every single day, this shift of market structure type, and in every time frame, 1 hour, daily, 15 minutes, etc., etc. Okay. So let's see just if the continuation pattern would have worked right there. So this is, let's say, the first entry. If you want to enter from, you see same thing here. This is the only red candle which produced this move. So the only way to trade from this break of structure. And so you wait, let's say, for the fair value gap retest. You sell from there, stop loss above, boom. Let's say you miss this one. Here there is no retest. Here there is one retest, boom. And then, yeah, you get only two chances. So the first one and second one. After that, you have taken the liquidity. It's too late. And yeah, that's it. So now let's get back to the conclusion quickly. So this shift in market structure gives you a clear and objective way, not only to enter a trade, but also to see what the market is actually doing in every time frame. And the most important thing to know is the direction at any moment. I will always repeat it. Sorry, guys. I know I'm repeating myself very often, but this is very important. So then it's easy. You just have to wait for a shift, which you already know how to do. So when direction is not clear, wait for a structure that makes you see clearly the liquidity, such as, the range that I showed you multiple times in this video. So it happens every day and in every time frame. So this is something which I'm proud of because I found myself, I find it myself, and it is working pretty well every day. But mostly I'm proud of this because I know it will help many traders sharpen their edge and forge their trading career. I really believe this concept will help you guys. And that's why it's important for you to share this channel with other traders, because you will also contribute in helping other traders in this difficult journey, which we are all going through. It's very important to help others, life, universe will give it back to you. And I'm very happy to share this concept with you for free. And I would be very happy to see your feedbacks, guys, and to see this channel grow. And I will be excited to share other new things with you, always for free. Thanks for watching, guys.